So, you are about to refurbish one of your properties and you want to know what costs you can offset against your rental income. Well, check out this video because we'll explain all.
Hello, I'm Louise Misiewicz.
Hi everyone, my name is Simon Misiewicz and we're from Optimise Accountants. So, as we're going to be talking about refurbishments, and really Louise, what we need to think about here is why do people refurbish their properties? What's some of the advantages of buying a property which is already done up versus buying a property that really is, well, a bit of a shack? Why would anyone want to buy a shack?
Well, I guess one of the first reasons is because it's probably going to be an awful lot cheaper than buying something that's already a finished, perfect example of the product.
And why is that such a good idea? I mean, it's you might be able to get that done, but what's the key advantages here? Because what's going through my mind is, if I'm buying a property, I might be able to buy it below market value, or what you might hear as BMV, right? So this is whereby you might buy a property for £120,000, but because it needs doing a lot of work, you can start to negotiate. And one of the tactics you can deploy is, if someone's buying a property, you could say to them, look, the property's on the market for £200,000. But as you go around the property, you could say, well, I need to replace the kitchen, need to replace the bathroom. How might you go around a property to help yourself negotiate a better price for that property?
So the first thing you're going to need is your trusty piece of paper and a pen. And you need to be carrying this around with you as you walk your way around the home you're looking at buying. This is going to be your list of all the things that you want to correct on that property to bring it to the standard you need for the rental that you wish to offer. As you work your way around that property, you're now starting to total up all the things you're going to have to do to it. And this list is now going to feature as part of your negotiation technique, because quite frankly, this list is going to help when you're at the negotiation point. You're going to use this list as the amount that you're looking for as a discount, as a minimum. And don't be surprised if that list jumps into the thousands, if not tens of thousands of pounds, because you need to be realistic with how much it really is going to cost you to do all those works.
If you're able to negotiate down on a particular property, once the property's been done up, surely it has increased in value. What's the benefits of buying a property below market value, as Louise described, and then for it to be increased in value? What's the key advantages of that?
Well, it all comes down to lending and finance, of course, because if you now have a beautiful property that you've finished the completion of, if you like, of all the works you needed to do to it, there's a very strong chance it's now worth a great deal more money than what you paid for it. And you would hope that, surely, because you've put that money in already. But here's the opportunity. If you are looking to now refinance that property, because it's worth more, one would hope that the mortgage you can now get on that property will have increased from when you first bought it. And that means you're in a position to start extracting money out of that property from that refinance, and perhaps use that money to go buy the next one.
And a couple of tips for you there. If you manage to buy yourself a nice picture of the Optimise logo, I no doubt it will increase your value of the property by at least 25%. But the other thing I would say about all of this, on a non-joking side, is the fact that you've now got a property, you're refinancing, and it's what people call no money down, because you have purchased a property, you've extracted all your money out, and now you've got an infinite return on your investment. So who likes the idea of having a property that you are constantly putting money out of, but quite frankly, you've got no money invested? It's a great idea, isn't it? So Louise, one of the things that I used to do is I used to go in to do some of the project management and do it the typical Magnolia style. And the rental was really competing against other properties, which was also Magnolia. So it's difficult to negotiate on rental when there's lots of properties like yours, which is boring, standard kind of furniture, etc. But you attended a course which really changed fundamentally the return on investments on our assets. Why don't you share with the audience about that?
Sure. So I found out that a company called Icon Living, run by a gentleman called Julian Maurice, was a fantastic course because it wasn't necessarily looking at the fundamental of knocking down walls and changing the aesthetics of a building by attacking almost all the bricks and mortar. It was actually looking at how you furnished it and how you decorated it. And it was an absolute dream for us because we started looking at things other than magnolia and white. We started to see opportunities to bring in colour, to bring in furnishings, and quite frankly, the first property we did it on was a really small little one-bedroom flat, and we almost doubled overnight the rental that we were able to earn from the property, and it rented within an hour.
And what kind of things did we do differently? Because when I had the property, I can remember now that was getting $395 rental. It got picked up by you and Icon Living Design at $625. So talk us through the image that the guys are watching now. What's the real main fundamental differences that you made?
I think it was about finishing the room as though you were going to live in it yourself. So thinking about bold colour, but thinking about how it would work as a palette of colours as well. Making sure that you had the finishing touches such as great photos or great pictures on the wall. Thinking about how you would make the furnishings look great. So having a super rug perhaps on the bed, as well as great cushions that matched in as well. And then also thinking about some of the things that lots of people forget about. Things like lampshades, things like furnishings around the windows. Just the basics to really bring it all together and make sure it felt like it was a finished room ready to move into.
So if there's any guys listening and watching to this video, one thing I would say to you is get a woman involved. Second thing is certainly take down the Walt Disney pictures that you thought was a good idea, because it really isn't. So from that, you can hopefully increase rental on that property. And actually, we had less time on voids, because when people saw these photos on Spare Room, which we was advertising on, people were snapping these rooms up pretty quickly, weren't they?
They were, and what was really interesting was the feedback when people came to look. So they would say immediately, oh, it looks exactly as it does on the photo. This is exactly what the room really is like. And I got the impression that perhaps a lot of rooms were being set for the photos, but actually when they went to look at them, they really weren't still looking that way, and ours was.
All right, so the next part we're going to be talking about is the actual cost of refurbishment. I recall when I started a property, I'm an accountant, so I was scrutinising every kind of cost of nail that was going into the walls, which was really counterproductive because the amount of time I spent on it was vast. But then we came across a company that significantly helped us reduce our refurbishment costs, and that company was
LNPG, also known as Landlords Network Property Group. And LNPG is an organisation that you can access from their website. It is a membership site, but it allows you to access discounts from quite a few high street stores and also refurbishment systems and refurbishment organisations. So a fantastic resource to anybody looking to develop their properties.
And when we talk about refurbishing a property, we used to spend between £10,000 and £18,000. And we got to a model whereby we knew that a 3-bedroom house would cost £12,000 to £14,000, and we was very scientific in terms of the costings. So let's take an example here. When we had refurbished a kitchen, we may have spent £2,500 on that kitchen. But then we moved to LNPG. What kind of prices would people be looking at in regards to LNPG?
Well, that's a great question. And depending upon what you wanted to utilise, at the time, it was a very well-known high street kitchen provider that LNPG worked with, and they still do, I believe. But what they were able to do was to help us bring down that cost from about £2,500 with all appliances down to under £1,000.
Wow.
Which is a massive, massive saving.
Yeah, and you could do that throughout your refurbishment. So it's not just the cabinetry and the white goods, but there's other things that you can save on as well. We're talking about plasterboards, we're talking about paint, we can talk about what's the other kind of stuff?
Tiling, electrical items, plumbing items, boilers, radiators, paint, everything you can think of you might need in a property. I'm pretty certain 90% of it will be covered by an LNPG agreement.
So certainly worth the membership. We're talking £250, maybe £350, not significant compared to the savings that we have. And I believe we've renewed our membership for the last 5 years.
We have indeed. It gives us such huge benefit. Often the first time we go to the paint provider for a particular property, quite frankly, we save the annual membership in the discount alone on paint.
Okay. One of the things that I like about refurbishing a property is the tax savings that you get on there. There's an image coming up right now. This is from HMRC's very own website, so it's worth having a look at that. There's a link appearing above my head and below this video description as well, so do check out that particular website. Now, when it comes to refurbishment, there are some great sayings that we like to use, which is
repair, replace, refurb.
And when we talk about repairs and refurbishment and replacements, if you can recall that saying, especially when you go around a property, then you need to be thinking about its tax deductible. So if we're looking at a bathroom suite that you are going to be replacing, or cabinets in your kitchen, those could be replaced and those would be 100% tax allowable to be offset against your rental income. What other types of costs can people really offset against their rental income?
So other costs might be, for example, where you have to replaster a room. It could also be where you're having to replace, for example, tiles from the roof. It could even be tiles from the bathroom. Anything you're replacing is actually going to be captured under this heading and is a tax deductible expense.
Which basically means that you can do what we did. Now, there's one thing to be getting money from a property, but if you're spending all the money and giving money away to HMRC, then you're not going to be left with too much money. So using LNPG to reduce your costs, Icon Living Designs to increase the rental, but then you need to reduce your tax liability as well.
So with this technique, we were able to be in a place that we didn't pay tax on our property investment portfolio for the first 8 years of running our property business.
Which, if you have to think about it, then you need to watch this video again. You need to watch this video again. Lewis has just told you that we had a property investment portfolio in which we had rental income coming in every single month and we paid no tax. Now, there is a bit of a downside, isn't there, to this, because I recall I had a conversation with a mortgage broker to say, we're so brilliant that we are tax efficient. And then, unfortunately, we had a slight issue, so it may not always be helpful. Can you recall what that issue was?
Yes, so we hit a point where we couldn't get any more lending because it looked as though we were not making any money whatsoever. And of course, lenders want to be sure they're working with people who are making good money.
So we've explained the advantages of why you might buy a property that you do up and then refurb. There are, however, some disadvantages. The key one there is?
Well, I would say the first disadvantage is that it requires money. So when you are completing works on the property, you're now going to put your hand in your pocket and pull out cash, whether that is your money or somebody else's that you've borrowed, in order to get these works done.
And if you're talking about getting the works done, there's a lot of money. There's also this matter of working with builders that may well rip you off. And you do need to be very careful with this. How can people protect themselves from, let's call them rogue traders?
Well, one of the first things, of course, is to get referrals. Make sure that people are providing you with strong referrals for any of the tradespeople that you're utilising. They're likely to present themselves consistently, one would hope, and if they've already got great referrals, then the likelihood is they'll do a great job for you as well. We also found when we started to do larger refurbishments, bringing in someone who had skill sets to manage and control both the individuals who were performing the works for us and the monetary movement, if you like, of cash between us and the tradesperson was ideal. And that often falls to a person such as a quantity surveyor. So we utilise quantity surveyors to manage certainly the larger projects to ensure the work was being done and to the right standard.
And once you buy a property and you've got someone coming in, how long typically could a refurb take? I mean, let's give a best case scenario, but also a disastrous one where builders are messing you around, off to the pub on a Friday afternoon, be careful with that one, or even going off to see other people's jobs whilst they're charging you. That's a good one. But typically, what's the time frame of doing a refurb?
If you're going to be looking at completely refurbishing a property, let's say a 3-bedroom semi, so you're going to have to do a bathroom and a kitchen and perhaps do all of the rooms around those two, then the likelihood is it's going to take between 3 and 4 weeks if you have someone pretty much dedicated to just doing that job. The worst case scenario I've seen so far, in particular for clients, is it's taken in excess of 2 years on one particular property to get that work done. And it wasn't as though it was a mansion. We're not talking anything more than a 3-bed semi, but for a whole host of awful reasons and really unpleasant reasons, it all went completely wrong. And that property was empty for 2 years.
Which basically means that you have all this money, right, tied up with the refurbishment and no rental income at all, which is significant amount of time, stress, anxiety, and a depleting bank account. So you certainly do need to think about the cost of refurbishment, the time required, and indeed, if you've got a good bank account ready to pay for all this stuff. So then guys, hopefully this video has helped you understand all about allowable costs against your property portfolio, what you can offset against your taxable income, but also how you can generate more income from your property. More importantly, you need people around you, and that's Optimize Accountants. We can help you save tax on your property portfolio. So make sure that you book a tax consultation with us using the code YouTube25, or simply look to become a client of ours by going to our website www.optimizeaccountants.co.uk. So give this video a good old smash of a like button, make sure you subscribe to this channel, and if you have any questions at all, make sure that you write your questions because I'll be there to answer them for you. So my name is Simon Misiewicz.
My name is Louise Misiewicz.
And we'll see you again very soon.